Welcome back to lesson 2 under 7 minutes for day traders, beginners day traders. The stock market was created to fix a problem, a foundational problem between business and finance. How do private corporations can raise large amounts of money in order for the corporations to grow? Before the stock markets, businesses had to rely on wealthy families and banks and monarchies for them to get more money to be able to grow, which was limited and risky at the time. Corporations can issue shares to people in return for money. So there's an exchange, a legal exchange. I give you a piece of the company and you give me money. I want you to remember this relationship because it's going to be very, very important later on. But for now, understand that a stock is a financial legal instrument that a company issues to an investor who will give money to the company so the company can grow and do the business operations they need the cash for. That is the basic. Now, I want you to know stock markets have been around since year 1600 for the investors. The person buying the stock, whether you do it within seconds or minutes in the stock market in a daily basis as a day trader, or you do it long term by holding it and keeping it, the main relationship exists nonetheless. You're an investor. You give money for the stock. And I really want you to remember this. It's a legal transaction where you tender money and you receive a portion of ownership of some company through a share. Now, it gives you certain rights as owner of that, but we're not going to get into that, and this is not a legal advice for anyone. I'm just explaining the background of what the stock market is, how companies are involved, and how you as a day trader come into the equation as a player. By buying the stock, you are giving money in return for getting the stock, the ownership percentage. The stock market is a network of exchanges and systems where securities like stocks are issued. Think of it as an organized meeting place where everybody shows up, the company selling the stock or an agent of them, and the buyers, investors, come in and they want to buy it. And maybe some investors want to sell to other investors, and the other investors want to buy it from other investors. It's a legal instrument, so you can transfer around. It's done electronically through platforms with a broker. So in these platforms, buyers and sellers agree to meet and they exchange this legal instrument, the stock, for money at a price and at a time that they both agree. And I want you to really know this and remember this. It's going to come more clear to you later on in later lessons. But this foundational relationship, legal relationship, you have to really understand it in order to attack day trading the correct way. Now, the purpose of it, like I mentioned earlier, is for businesses to raise money, and it also provides the investor an investment opportunity. For day trader purposes, the key is delay gratification. Now, there are risk for investors. Companies can go bankrupt. You lose your investment. Necessary thing to know is what the marketplace is, the financial marketplace. You could think of it as a place where people come and meet to agree to a price. Nowadays, you don't see the people, you just see the orders in the platform. Just know and remember the idea that the financial marketplace used to be an actual physical location where people met and they try to sell something and there's someone buying that something for a certain price that those people agree at a specific time on a certain day. Do remember this because it's gonna come into play later on in other videos when I explain to you the market data information that you see in your platform nowadays. Now, all these people, the traders, are known as speculators because all they do is speculate what the price is, what the fair price is, and what could happen in the future. And that's the risk that you take. You buy something today, right now, and in 10 seconds, you don't know what it's going to be worth. You have no clue. You want it to go up so you can make profit, but you don't know if it's going to go up or down. Thank you for watching. And if you haven't subscribed, please do so. And if you like the content of this video, please smash that like. On to the next lesson.